Today's number is 2022. Why? Well, it has a little bit to do with margin debt. And of course, traders and investors have been taking a lot of that in 2025. So why should we be paying attention at the last 25 to 30 years of data when it comes to how this read tends to impact the markets? Well, don't go anywhere because it also could come back to what's going to go on with Bitcoin, gold, and maybe even what's currently happening with oil, which saw a massive rally over the last 24 hours. Guys, we've suspected some of these things for a while. Let's break down stocks, commodities, and cryptos into the earnings season. Well, welcome back, everybody, to The Daily Show. My name's Thomas Atkinson. It's great to have you here. And today we're discussing the latest macro, the big data, and of course, what just happened on Tesla to mark a whole bunch of different things. We'll also be going through margin debt and why it's so important right now to be extra cautious when it comes to positions. Could we be seeing reinflation? All sorts of things happening in the markets as we're in this government shutdown. Let's kick things off, though, with Tesla's earnings and what we actually learned from, of course, the Q3 earnings themselves. Basically, Cybercab is on track for Q2 26, he said. Optimus is in mass production from Q1 26, so that's going to be very interesting. And the robo-taxi fleet has tripled since launch. Safety drivers are gone by the end of year in Austin. So there were, of course, a couple of other things that were noted, including Model Y and 3 being at peak levels of demand. Free cash flow, like we just saw on the chart there, going up. But of course, more concerning than that, it is operating margin, which continues to dwindle and has done so for some time. Now, you guys will obviously argue that it's an AI business in transition at this stage, and that's, of course, what it's being marketed as. So it'll be interesting to see the hype train, especially going into Optimus next year, if we are to see it in Q1. Can you imagine people ordering those things and making YouTube videos about it? It's going to be pretty wild. I can see it right now. It's going to be wild. Guys, let's get into the big stuff, though, because, of course, margin debt has been accelerating once again. And you guys know I track this and I bring it to you both on X, LinkedIn, links in the description down below, and, of course, here on the YouTube channel. Make sure to follow us on those platforms. The links are there. It's awesome to have you over on all of them. Of course, we're posting slightly different things on each one to give you some insights into how we think about markets. So why is 2025 dangerous? Well, it's all got to do with re-acceleration of debts. And you guys can see here, leverage has been going up big time. This is just one way to represent it, but it does have some scary periods with it. 2007, the 2000s dot-com bubble, which to me seems very similar to this period over here. And of course, 2011. Now, why am I marking it today? Well, it has to do with entering into the danger zone. And of course, we can stay in the danger zone for even upwards of 2 years. But mark my words, at least in my opinion, I think we're in a very important and almost scary time when it comes to markets and, of course, leverage. And this comes back to, of course, the storylines that we're currently seeing so popularized on the internet. The first one here being the debasement trade. Now, everyone's been going on about gold and silver. If you've been watching the channel, you'll know that we've been crapping on about it for around 3 years. But the big thing here has been that everyone's just cottoned on to this idea that fiat currency devalues over time and it could be getting debased. Well, now it's in the press. Have a look here, according to Bloomberg opinion here of Google Trends, and have a look at searching for debasement and debasement excitement. It has skyrocketed. The last time we actually saw this was a mixture of 2020 and also that period just before the end of 2017. So this was actually a pretty interesting point as well. Why is this important? Well, it tends to be coming back to the statement we often mention, which is if it's in the press, it's probably in the price. And guess what the dollar has done over the last little bit? It's gone from selling to stabilized and even rising over some periods. So it just shows you, while people think that all fiat is going to die tomorrow, it takes a long time. And I think that people have goldfish memories. You know what I'm talking about, guys. I've got a goldfish memory some mornings. So why is that important to note? Is because you have to remember that this is a real currency war that we're in right now. It's going to happen over a 15 to 20 year period, and it takes a long time. So, of course, there is a lot more to this story than meets the eye. Now, from Duality Research, we've got some interesting information about markets, which I thought we'd go through first. Then we'll do gold. Then we'll go through, of course, some of the big options levels. But he's tracking high yield credit spreads, discretionary versus staples, which you know is the very important read here for the American consumer. In fact, it shows us 1/3 of the kind of American economy. And if that's on the improve, usually we're pretty bullish. And if that is starting to decline like it is right now, that's a little bit more worrying. So, of course, we are paying attention to that. And then high beta versus lower volatility. You can see here again, we're kind of just getting that sideways action. Now, why is this important? Well, it shows us that for the first time in a while, we're starting to see some cracks in the market. Pretty much since the Liberation Day lows, we've just been going up, 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 and every single piece of information has just been improving. Now, you may say, but what about delinquencies and those other things? Sure, but when it comes to what the market looks for right now, which is often earnings and just expansion, they've been getting exactly what they want on Wall Street, and the market's pretty good at sniffing this stuff out. Now, when it comes to a September being positive, that's actually pretty rare, and it often leads into this month that we're in right now, October, being a little bit more up and down, and that's why we're getting this volatility right now. We knew that October was likely going to be volatile based on the August-September, and Blue Kurtic here went through and did some pretty good information to show us again that the current stats that we've got often lead into positive November-December returns. And I think it's very important to note this, that of course each time could be different, but when you're taking a look at things from a top-down view, even if we get volatility here, most of the stats we've been sharing on the channel recently have been showing that there's still a little bit more thrust in this market, at least for now, even with those margin stats being at very scary levels. Remember in 2000, and we'll look through this more as we discuss it over the next coming days and weeks, because it's not going to be a day thing, that basically when you're looking at the 2000s, it stayed in that overbought kind of area of massive margin for quite some time as the bubble continued. And remember, bubbles can make a lot of people that are pretty smart sounding seem pretty stupid. So you want to follow that trend, follow that flow more than anything else, and just keep in the back of your mind, do I really want to be over levered over the next couple of years? Because that's going to be the big concern. Let's have a look at Wayne's latest study here. This is from Wayne Whaley. He's a great guy. He has some awesome stats. We've shared his information for years now. And I really like the way he updates his studies with the current market dynamics. So this means that it's adaptive. Sometimes people get too stuck in their data and they don't adapt it, and that means it's not going to work very well. Well, what he found was, of course, that there is a correlation here with the way that the markets have ran into October, and from October 18th to 27th, which we're getting close to, of course, the end of now, generally speaking, the markets are a little bit more on the touch of the negative side. It's not something you go trade off, but you need to recognize that volatility is usual around this time of year, and we often do go into a pretty strong November, often driven by the tech sector, funnily enough. Now, what could also be confirming that? Well, you can see here from Luthol Group that they've been doing a little bit of information here on the bellwether advanced decline line, and I do like this type of analysis. And of course, what it's showing us here is that last time, before the sell-off earlier this year, we actually saw a higher high market with bearish divergence on the bellwether advanced decline line. Now, that wasn't very good. It was a bit of a warning sign that we were going to probably go into a sell. We ended up getting tariffs, and of course, the rest is history. But now we find ourselves close to the highs, and we're actually getting new highs on these levels. So that's showing us a natural expansion. And the bellwether stock index here from Grant Hawkridge from All Star Charts also shows us something similar. The markets are actually still making all-time highs in some ways underneath the hood. It's just not necessarily driven by the tech side. And of course, that makes it very difficult for any of the indices to really do anything. So this could all change if we get bad earnings. But of course, at the moment, Wall Street seems to be upgrading everything. They're all going crazy across the board. And they seem to think that the estimated earnings path this year is continuing to improve. Now, that doesn't mean that the economy is improving. Remember, guys, the stock market and the economy are quite disconnected sometimes, and it can be a big concern. And this has been one of the reasons why so many people, and in fact, we have been loving gold and silver, the debasement trade before it became cool to even talk about that, the idea of currency wars, the idea of course, a lost decade leading into a better rally for these particular precious metals, all sorts of reasons why you might like gold. And we'll look at those soon. But do remember, the gold just went on a historic run, the best run it's gone on without a 10% decline in like a century. Now, why is that important? Well, when we take a look at gold, we have to now make a decision. There are people now saying this is the end of gold. And there are people saying that, of course, it's just a pullback in what is going to be a continuation for gold. Now, you can probably guess which one I'm in. I'm in the pullback into continuation for gold camp because I actually do think this is the real deal for gold. But at the same time, the more people that say this, the kind of better it is. Remember, when lots of people kind of think something, it tends to be less good. And we want to do it when no one wants to do it, which kind of makes it hard to beat this channel. Sometimes I talk about things and you guys, in fact, gold was a classic. I remember some of you were in the chat saying, "Are you a moron? Why are you liking this metal?" That was a few years ago now. That is so boring, so boomer, so whatever else. Well, the thing is that I've often found, at least in my trading career, which has gone now for, it's 17 years or whatever it's been a long time, that when you do something that is showing up on the charts, but no one believes it, it's good. It's fantastic to do that. Let's now look at some scary stats and then kind of bring it back by why we need to look at lots of different stats and not just one. So this one here is a 1-day percentage change, and no doubt it was a big sell for gold. In fact, gold was down over 5%, I think, on the session, and this, of course, meant that it was the worst since 2020. Now, when 2020s happened, you can see there it went sideways for quite some time and still starting to improve at the end of 22. Now, that's, of course, scary, but when you actually break it down to a 6% decline and pull out the data further, you may notice there are two other periods that something similar like this happened that, of course, I find encouraging, and they are both over here. Now, they didn't happen at the highs, but what they did do is they happened during these 2006, 2008 sell-offs. And what actually occurred here is we ended up making new all-time highs for gold and for silver and for other things. So I don't think it's over for gold and silver, but I do think that it's going to need to take a bit of a breather. And you'll see in the stats in a moment why. How to buy silver. It was trending on the weekend. I mean, when it trends, it's bad. It's bad. You do not want things trending except for just riding that thing up high. And again, that was proven pretty much correct there. Silver spot on a 9-week streak analysis. Nautilus did some research on this. It's just more of the same stats we've been seeing, guys. But this one's almost terrifying. I don't even want to look at it. Okay, we don't even want to look at this one because when silver has done something similar to this, 1 year later, it's never been positive. So you can't deny that this is a stat that's a little bit scary. Now, I do think silver went on a massive ramp. Obviously, it certainly squeezed out a lot of positions. People were lining up for it and everything. But I think, as always, price action will be the key. And of course, now we're looking for things to settle. And don't get me wrong, I don't think that gold and silver have necessarily seen the end of their volatility. If we take an overview here of some of the best runs for gold and silver, particularly gold, we can see that volatility has happened at periods like this before. It's sold pretty deeply. Gold can sell pretty deeply. I wouldn't be surprised to see a negative 20% to even 30%. It is possible, guys, before gold actually recovers. I don't know that's going to happen. And of course, I'm still macro bullish on it, but you can't discount it because it is something that's happened in some of the best bull runs. But certainly volatility is back in the building, and it's something we have to consider when we're looking at it. What hasn't changed, though, and will not change this time around, and it may be the ace up the sleeve, is central banks are going to continue buying. And you might say, why? Because we're in a currency war, and that takes a very long time. Take a look here at China playing a key role. This one here is from Daily Chart Book, Apollo Slock. I probably mispronounced his name, but the fantastic thing here is he's put it together in a cool looking chart, which says here that, of course, China and India are buying it all. And then, of course, this is where the demand's coming from. You can see demand has spiked over the last couple of years, and global central banks will soon hold more gold than US dollars. And when this happened last time, it shot up more. So again, would I be concerned about the bullish idea? There are probably 4 to 5 incredibly good macro reasons to own gold. We'll go through more of them in the future. So yeah, I think volatility is here. It's normal. That was a crazy market. It could even boost up next week, but it seems unlikely that it's going to go, rallying off into 6,000 anytime soon. Generally, this marks a period of consolidation for that precious metal. Now, speaking of consolidation, the argument now is, well, if we saw gold and silver go, generally Bitcoin's delayed and then it goes with it. And we are in, of course, the halving cycle. So we're coming up to a potential here for the 50 weekly. We're coming up to, of course, some amazing halving points. We looked at these in our last video, so check them out. I'm just going to bring them through here. Brett_eth, cool chart here, obviously showing standard halving cycles. We're getting to the pointy end here of where markets often do sell. And you can see here the averages for Bitcoin, and they're uncanny. They're terrifying when you think about it. I do think this cycle is going to be different. A lot of you in the chat said, why do you think that? Are you mad? There's no way that it'll be different. Look at the stats, man. It's just because I think government policy and Wall Street. See, Wall Street wasn't in the Bitcoin market anywhere near the amount that they are now. And this means new shenanigans have entered the chat. And I do think that this is going to make it so that Bitcoin could do some pretty weird things moving forward. More on that later as we look at the chart. Let's have a look at earnings. We saw Tesla, as I said, it's an earnings, but of course it's the hype train to the next level, which is the AI that's going to be most interesting there. Intel, you can also see some of my other dot points over on X, by the way, and Intel coming out after the close on Thursday. As always, you want to make sure you're aware of some of the implied volatilities. If you're trading BYD, could move plus minus 10% according to the options market. It's not our opinion, it's what they're looking at. Now, I just want to make a quick announcement. If you haven't already, sign up to our newsletter in the links in the description down below. I'll be writing one today. It'll probably come out somewhere around Thursday morning US time. And it's relaunching, so it's going to be really awesome. And basically what I'm going to be doing is putting one of my favorite charts of the week that I'm finding in that every week up until the end of the year around Christmas. So if you want to get access to an exclusive kind of chart that I'm going to just have in the newsletter, sign up down below. I think it's going to be a good little write-up as well for you guys to just see a couple of ways that I'm thinking about stuff along with this show. Think of it as like the yin and the yang. We've got them coming together. So you get a bit of a write-up. We need to read sometimes, guys, not just watch videos. And at the same time, we have to critically think about some of these charts. So that'll be really cool. Now let's have a look at S&P. What's going on here? Advanced decline lines kind of sidewaysing. The market is waiting for its next move. It's coiling up. We don't know which way the move will be so far, but of course, the data stats would be more towards the bullish end. You've got to be generally optimistic in the US markets. I'm concerned about the margin debt. I'm freaked out by it in many ways, but I know that it doesn't just go like this. We're going to see other things. So we're watching those bonds markets very closely, and of course, the American consumer as well. US yields have moved, but at the same time, they're just kind of floating around down a little bit. And US 500, here is the options high and low. But more importantly, let's look at the options. And 6680 is a massive put now. So basically, each day, people try to short this market off. And each day, what happens? People continuously kind of put massive put walls behind it. It's going to be a little bit tough for the market to actually want to go down yet. If it goes under 6680, that could be an important point for the next 24 hours. But do remember, we're stuck in this range. So I'm going to say that if you haven't got new positions in, you probably want to be fairly neutral until you get the information for the next move. And that's just what you always do in stocks. The good news is there's so many abundant single stocks, like even oil services, something we've been talking about here on the channel. Good day for it. Oil came out of nowhere, triple tweezer last 24 hours. So many different opportunities. Tesla's back to about 430 in after hours. 420, 430 is around where the put support is. So we'll see whether that holds again. And Nvidia is, of course, absolutely painting the wall with paint. It's boring, it's drying, it's doing nothing. So, of course, it's sitting at where you'd expect it to be. Still bullish on the charts, the way we look at it. IBIT, this is the big one. What is going on with Bitcoin? I kind of feel like Bitcoin needs to go in and wipe out 100. And it doesn't have to do it. Of course, we've got the 116.5 kind of level that could bring the bulls back as well. But we're now trapped in this fairly spiky range in the tight area. And if we go underneath 100, what that's going to do is it's going to get a lot of people saying the halving cycle's over. This is the end. This is the same average. And then if it rebounds, wow, it's going to be such a squeeze. So I'm certainly looking at Bitcoin with both eyes open. We could be short, we could be long. At the moment, I'm going to be long because you do generally want to be optimistic, but I will be paying a lot of attention, as we all will here on the channel. Gold, Yep, it's more of the same. Not too clear, other than we knew we were at a really huge resistance the other day at 400 on the calls. So for now, we're still waiting for further clarity from the options market. Let's bring up oil though, because it was a bit of a banger. Now, this one was actually found by a member of our community. Links in the description down below, the Market Masters Club. And they actually alerted me to the old US oil versus UK oil one that I go up about. And I hadn't actually searched both of them that day, so credit where credit's due. It's those guys that came up with it. They've got big brains out there. I don't know how it's possible, but they're finding it all. And what they did was they found that Brent was actually leading. So the thing was Brent leading. It led into a pretty cool trade. We're now at the first level of resistance straight away. Oil just sometimes does that. But what it did was it spiked up. Now, I wasn't too interested in oil because, as you know, I think the barrel is scary this year. But what we did see was a big resurgence the last couple of sessions in oil services and oil stocks. And a lot of them are actually fairly well priced and at very interesting levels. So could this be like that reinflation trade? Are we finally going to see it while nobody's been talking about it? Remember, I say if it's in the press, it's in the price. When no one talks about it, it's when the most interesting periods happen. What do you guys think? In the links in the description down below. Is this the next one? Is it going to be black gold, guys, that we're going up with? Who knows? But certainly an improvement there. And I guess it's just further justification for why you look at the charts more than anything else. You bring the data, you bring it all in, and you kind of get that knowledge. But at the same time, you want to be watching it. Here's another chart: gold versus S&P. We knew it was a critical level. If this comes out, gold is, I think, going to fly. It would also be probably a period of time where gold or the markets themselves may actually be weakening. So it's a really interesting ratio there. And the updated bond spreads have come down a little bit. So actually the market is not as freaked out as it was. You can see here versus high yield junk as well. It's kind of a floating. And if we look at the American consumer this way, what you'll notice is it's just started to weaken off a little bit. So certainly something to watch. We will be clearly looking at this, because this is actually the worst sell-off of the American consumer since Liberation Day. What that tells us is the market is actually the weakest it's been since Liberation Day rally. So this is the worst period for the market the entire way up. And that's across the board. Doesn't matter whether we're looking at bond spreads, we're looking at this. There are certainly more cracks here than there were, and that's why we remain a little bit cautious, although, of course, the stats are there. So what I'd be doing is I just down lever myself. That's what I'd do. Dollar index, but hey, you do whatever you want to do. It's not advice to go either way. Let's have a look here at the US dollar, and you can see it's bouncing up again. If it's in the press, it's in the price. Nice base structure. We first talked about this over here, guys, saying that the dollar was likely to stabilize, if not go up. And that has been how it's kind of trading through that time. And gold itself hit 4K, which was, of course, pretty cool level. The daily 20 is certainly the first level for gold, but I don't know if it's over yet, guys. That was a brutal sell. Usually it floats around a little bit, and silver also still sitting around those lows as well. Tesla went down, went up, went down in after hours. Again, no real read until that breaks either the low end at 410-ish or the high end at 450 and keeps squeezing up. Chinese stocks, they have rallied, they have dropped, and they are still around a pretty good area, I think. I like Chinese stocks mostly from the liquidity standpoint. There's quite a lot of liquidity that's come in from the central bank there in China. So that's why we've liked it for about a year and a half, and so far it's been quite nice. So we'll see whether that gets another bid off that price. Nvidia, not much going on here. So, of course, we need to be watching semiconductors very closely, and we need to see whether that goes and takes a new low. If it does, obviously shows quite a lot of weakness. Why? Well, you'd have a double top on semis, and if we lose semis, we tend to sell in the market. So again, something to watch. At the moment, it's bullish. And NASDAQ, you can see here, is rallying still. So again, if I'm an investor, if I'm a macro longer term trader, I don't really care because the markets are still bullish. Nothing really scary has fully happened yet, but you've got to be on the lookout. When volatility like this comes in, it means there is a little bit of instability in these markets. Now let's take a look at Bitcoin, because of course this is one of the most interesting charts this week. It's come down and stabilized around 108, and it has a whole bunch of news coming out the end of October about different ETFs and all sorts of things in the cryptoverse. But it's like 116 is going to be more the breakup. And what I'd actually like it to do is go down and kind of tap under 100. And you might say, why? It's because I think it needs to almost play a storyline. This is the best anchored VWAP you've had in terms of the buy area. So it's been pretty consistent. There's a daily 50, actually weekly 50, I think, underneath here. The weekly 50, which is there. The Scottie Pippen weekly 50, we'll call it. And then if we take all of those things out, then you're kind of freaking everyone out. And that would get us down to this level. And then, of course, if we saw a spike off that, that would be fantastic. Now, if it goes under further, or goes under here, this little demand over here, then we'll have to revisit it. Okay, then we'll revisit it because that may actually start blowing out a lot of ideas. But for now, I guess it's still all green, all good. There's still government, there's still Texas Stock Exchange, there's still tokenization storylines to be read and had and all sorts of things. And if we're to believe the market stat, which is November, December are always positive in similar scenarios, which we keep getting very similar thing, all of this stuff seems to be simmering, but none of it's coming to the surface to freak any traders or investors out just yet. Guys, if you enjoyed today's video, please make sure to subscribe. I appreciate each and every one of you. We're done with Brisbane trading event for now, unless people don't come for whatever reason. So I'll let you know, but thank you very much for the support there. Definitely follow us over on X. Check us out on LinkedIn. Follow the newsletter as well. New one coming by Thursday morning, and that'll have an exclusive chart in it in terms of some of my thoughts. And of course, if you're interested in finding out more about how we replicate things such as gold, silver, China, even the oil stocks the other day, all these types of things, they're actually replicable. The most important thing in market, pretty much trading or investing, is to do the same thing on repeat and treat it like a business. So if you're interested in that, check out our day trading masterclass, which is actually more of a position-based masterclass, and a advanced class as well, because that is awesome for cycle analysis. Thanks so much, everybody. I'll catch you for now.